Hey friends, I am back. My laptop died, so I'm actually on a new laptop. I was able to get trading stuff up and running pretty quick, but the video stuff has been a little slower. So I thought I would just jump in quick. This might be a little rough because of that, but I thought I would just jump in and do a quick little video on trading pullbacks. So this might be fun for people running a smaller account who maybe like to be more, maybe they like to target specific stocks and be more engaged in the price chart when they're trading. So if that's you, this video is for you. I did used to trade this way when my account was quite small. So probably around like 10,000 to 50,000 or so, I was trading this way. And this is not delta neutral trading. This is directional trading. So we're looking at the chart, looking for a directional move that we think is coming. But it is still a theta trade, so there still should be edge to theta, even if we're complete muppets when it comes to picking direction. As long as we're a break-even trader, then hopefully we make money as an option seller. So if that sounds good, here is a chart of Halliburton. And this is not a trade recommendation. I'm just going to use it to describe the kind of things that I'm looking for. We have been in an uptrend since May. And notice how during that uptrend just meaning it's going from the lower left to the upper right, price bounces around, right? It goes up, it comes down, it goes up, it comes down. Over time, it's going up, but within that, it has this kind of cyclical behavior. It oscillates up and down. So we're looking for stocks that are in an uptrend, so the trend is with us. There's an old trader saying the trend is your friend. And then we're also looking for a short-term pullback to time our entry, to be like, okay, this is a really good time to get in because you know, uh, past performance, who knows, right? But we're thinking it's going to bounce as it has done. So that's the presumption. Maybe right, maybe wrong. And yeah, so for this one, it's been an uptrend. It's pulled back 38. You see it's bounced off 38 a couple times. I like using price levels. I would find 38 kind of interesting. So I'd be looking to sell the 38 and buy further down, or to sell below 38. Uh, give yourself a little bit of extra room can be nice. Now, I'm not a huge fan of indicators, but for this type of trading, there are two that I do like to add to the chart. So we'll go ahead and do that now. So one is something a lot of traders use as a trend filter, they call it, and that's the 200-day moving average. So I right click, I come to studies. Always pick add study, never pick quick study. Quick study deletes all of your old studies, and it's usually not what you want. So add study, moving averages. You can just come to all studies if you know the name, right? And so find simple moving average that way. Then it takes defaults, but we can right click on it to edit it. And I'm going to set the length to 200. 200 is extremely popular in the trading world. And I do believe that it does have edge as an indicator of trend. We can talk about that another time. But yeah, a lot of traders do use it. So here it is. And we are in an uptrend. We are above the moving average. It's just the average price of the previous 200 closes plotted as a line. So if we are above where we used to be, well, the 200-day moving average is kind of like where we used to be. So we're above that. So now the other kind of indicator is called an oscillator, and it tries to isolate these up and down kind of moves and just express that part of the price behavior without the longer term swings that we see here. So again, add study, not quick study. We want to add study. And we're going to come over to all studies. RSI is the one that I like. The way RSI is actually, I think it was developed in the 70s. It's a very complicated formula. It's not magical though. All of these oscillators are really just normalizing the price into this sort of 0 to 100 range. And then when you have an up move like this here, you can see the oscillator also is going from low to high as price goes from low to high. Um, but it gives you something to kind of normalize against. And so for a pullback, I'm looking for the RSI to be at or below 25, right? So here we've had a sufficient pullback where, it's even highlighting it for me because I set the indicator up that way. So that's a green light to go long if you were trading the stock. The trend filter is a green light or in an uptrend. to go along. Resistance and support is kind of more art than science, but I do recommend working with it over time, looking at charts and getting used to it. So this is my personal view of support. I think 99% of traders would agree with me on this particular one. And so, yeah, we're above that 38, might be a nice level to sell or even below that. So let's go ahead and make a put credit spread. So I'm going to go trade, right? Now, if you're thinking of this as a short-term swing, you could make the case that 19 days is fine, even though that's pretty close in time. I wouldn't argue with you about it. I prefer going a little further out. Um, you could also manage this trade by putting it on, and you could actually just close it based on the oscillator coming above 75. I don't like to do that. I like to just throw these on as a spread, and then once it's on, I manage it the way that I would manage any spread. So for me, I would go 47 days. Right? 38 is as close as I'm willing to go. So if I wanted to be aggressive about it, I might do something like a 38, 36. 58-cent credit is more than 50 cents. Uh, Bid-ask spread's only 3 cent wide. Always take a look at that. If that's really wide compared to the actual bid value, then that would be a red flag for me. But 58 cents, that's good. I would go ahead and ship this. So this is like 60 bucks basically. If this trade was down 120, I would pull it. If theta goes negative, I would pull it. For profit, you could target $30 in profit, just go for half, or you could go for more than that, 40, $45. That would be fine too. Just decide what you're going to do before you put the trade on, and then just let the trade play out. Some of them will win, some of them will lose. That's totally normal. The nice thing about using indicators like these are, instead of looking at thousands of charts trying to find these pullbacks, you can scan for them. So you can describe things like what the price of something is, or how many shares it trades, that kind of thing. But you can also use the indicators to narrow your scan down to be more specifically looking for something in an uptrend as defined by trading above the moving average, something in a pullback as defined by RSI being below 25. So let's go ahead and make a scan. So the first thing, I'm going to click this add filter. Can I clear that? I guess I can't. I'm going to hit stock. And I'm going to look for a close price. I'm going to say above $10 minimum. Oh, now you can pick your universe. I've already got it set to penny increment options, which is what I would recommend. That's under public down in here. But you could have it set to all. I've lost where that is, all stocks or whatever it is. Um, but yeah, anyway, so over $10 gives us some room, some price points we could be selling credit spreads at. Uh, Even 10 is kind of pushing it. I kind of like 20, honestly. Now I'm going to add average volume, and I'm going to say 2 million shares. This is really arbitrary, but the lower the volume of the stock is, the wider that bid-ask spread can be in the options market, right? So these are just technical candidates. This is something I'm willing to trade options on. So now for the pullback part, I'm going to add a study filter, and it gives us this by default, which is kind of useless. And this is just a bit arcane. ThinkOrSwim is a bit arcane about things, but we say custom, and then I come here and I say edit, and then I have to come here and I have to say study again. Then I can come down and find simple moving average, right? So there's simple moving average. Uh, I like the 200-day, and I'm looking for things in an uptrend, so I want the simple moving average to be less than the price, and we'll take the close. Okay, and now for the oscillator. So we're going to add another filter to study again, custom RSI, 4 period, and we like that to be less than or equal to a value of 25. Okay, so there's our pullback. These are just general candidates. And if we scan, and you can see Halliburton's on the list. Now, the other thing you'll notice on this list is that you've got these earnings calls, right? So this is when earnings is. There's an earnings conference call. It's coming up in November 1st. That's right around the corner. I'm making this video on the 29th of October. Um, so I tend to avoid stuff with earnings right around the corner on a pullback because there's going to be this big move that's fundamental that you can't predict. You don't know what earnings is going to be yet. So for me, I tend to avoid them. So Halliburton, that was why Halliburton jumped out at me because obviously, I did the scan earlier. Adobe is another nice one. You could do Adobe. It's a much higher price stock, so you're going to end up doing a wider spread, and you need a bigger account to handle that. Otherwise, I would have suggested Adobe. You can do ETFs as well. QQQ is a pullback trade. That's totally fine. Google, again, expensive. Hal at 39, this felt like a stock that like almost anybody would be happy to trade, even in a smaller account. So that's why I picked Halliburton. So yeah, now can you do this to the downside? You can. Um, option premiums on the downside aren't as good. The edge is not as good. I believe there is still edge there, but all of it not as good. And there are reasons why an upside pullback uh, can also make options pricing not as appealing. So, with that caveat aside, yes, we could. So, what you can do is, if you like the scan, you can save it. You can come in here and you can say save scan query, and you can give it a name so that you can load it again later. And then all we want to do is edit these last two conditions, right? So with this one, for a downtrend, we want it to be that the moving average is greater than the price. It's coming down above it. We want the RSI to be at or above 75. And that's our downside pullback scan. And we have got a couple results here. Capital One jumps out at me right away as a pretty liquid underlying. So if we come over here and we look at COF, the catch would be it just had earnings. So it jumped because of earnings, right? Do you still want to consider that a normal pullback? That's kind of up to you to decide what you think of that. I don't hate it. I feel like there's a lot of price up above it uh, here, like a level here, maybe $100. I don't hate it, but I don't love it either. But this is a pullback to the upside that you could then short. And maybe we do this one short term, right? So we come in, we say, hey, okay, call side, $100. Spread's a bit wide. So I do like to collect at least 50 cents, but when your bid ask spread on these is 20 cents, I would want to collect a lot more than 50 cents. So there's 100, and yeah, like I'd probably go at least $5. So there, yeah, I've got a decent sized credit relative to the bid ask spread here. So bid ask spread is 20 cents, $1.47. Okay. And then, yeah, and then ship it. So same idea. I would probably pull this off if it was down like $300. If $300 is a lot to lose, or heck, honestly, $5 wide, if $350 is the max loss, is a lot to lose, I wouldn't put this trade on. That's a decision you're gonna have to make based on your account size and your risk tolerance. Now, if you don't have ThinkOrSwim, there is another option. You can use. There's this website called StockFetcher. It is a paid service. It's $8 a month. I kind of feel like it's a little pricey, but your commissions are going to be way more than that anyway. So if you don't have ThinkOrSwim, this is the one that I would probably use. And you just come over to New Filter and you start describing what you want. And there's some help you can jump into, but it's usually pretty readable, right? So we could say close price is over $10. Average volume is at least 2 million. Uh, close for is less than 25, something like that. And what I look for in the charts is I look for the simple moving average and the RSI because I mentioned them. They should show up in the charts. So there is the simple moving average, that green line, and then this is the RSI 4. It even says RSI 4, right? And here it says MA 200. So This is great. Now, I'm not a paid member, so it's just giving me a demo. It's just going to show me 5 results from the previous day. So you can see, for example, Amazon yesterday, it was above the moving average, and the RSI 4 was like 21. So it passed yesterday. So this was a way that I used to trade. I wasn't always direction neutral, which is my preference now, just focusing on the options edge. You can add direction, that's totally fine. With a smaller account, especially, you might prefer it. So, yeah, I hope this was interesting. And if you have any questions, drop them down below. A like, a subscribe would really, really help out. Brand new channel, and I appreciate it. All right, guys, I will catch you in the next one.